Hey folks, today Adam and I are DTC. We're down to chat. We're chatting about the DTC, the Disability Tax Credit. I'm Rob Tetrault from robtetrault.com, head of the Tetrault Wealth Advisor Group here at Canaccord Genuity Wealth Management. Brings me great joy to be here. Folks, if you want to chat a bit more about the Disability Tax Credit, please go to www.speaktorob.com. We'd be happy to book a no obligation consultation for you to explore some of the questions you might have. So the Disability Tax Credit, Adam, I should introduce my guest here today. Thrilled to have Adam Buss, planning and wealth specialist, wealth and estate planning specialist. Do I get that right?
Yeah, you got it right.
Okay.
Yeah.
Wealth and estate planning specialist here at Canaccord Genuity Wealth Management. Adam, thanks for being here.
Thanks for having me back.
The Disability Tax Credit, how does it apply and what is it exactly?
It's a non-refundable tax credit for those who have a qualified disability, and it's basically meant to I should say is the optimum word, to equalize the disadvantages and the added costs that an individual with a qualified disability may face. So they're basically giving them a little bit of money back on an annual basis.
Okay, so that would mean, for example, an adult with a disabled child could.
It could be an adult with a disabled child, an individual who's above 18 and has a qualified disability, any of those things. And this is a tax credit that can kind of carry on for your lifetime as long as you're considered qualified.
And the DTC is attached to that individual with the disability.
Correct. It's attached to that social insurance number, essentially.
And when they're a minor, their parents, in theory, could get would get the credit.
Yeah.
And when they're adult, potentially they would get the credit on their own.
Yeah, or even if they're an adult and they have somebody who needs to claim them as a financial dependent, that individual can claim that disability tax credit.
Okay. So there's a bunch of different ways a person can be eligible for the DTC. I guess you must meet some of the following criteria. What would some of those be?
You know what? There is substantial criteria. It generally means that you're blind, you have troubles with certain activities of daily living, different other restrictions. There's quite a lengthy list.
Okay.
I'd certainly recommend going to the CRA's website to look at the full definitions. But when in doubt, if you have any sort of disability that you think may be qualified, chat with your doctor, chat with your tax professional to see if you can get qualified for the disability tax credit. It's a huge advantage off your income tax return.
And I see here that the disability, also the impairment, must be an impairment. It must be prolonged. So they're saying it's got to be for an expected continuous period of at least 12 months.
It's got to be a little bit longer term, right?
Yeah.
I could break my leg and have a reduced lifestyle for the 6 months or whatever, but it's not a long term, right? It's going to be something that affects your lifestyle and your life on a long-term basis.
And it must be present substantially all the time or all the time, so at least 90% of the time. Now, the grant itself the tax credit.
Tax credit.
So does that just reduce your tax or does it reduce your income? And it's $8,000 per year, correct?
It's $8,000 per year, which I believe reduces your income. Again, I'm not an accountant. We always recommend reviewing these items with your tax professional to make sure that it's being properly applied to your situation.
Okay, good. So if you have the DTC, if you have the disability tax credit, then you could check out our other video on this, but you could automatically qualify for the RDSP. Is that correct?
Correct. So qualifying for the disability tax credit is the prerequisite for qualifying for the RDSP, the Registered Disability Savings Plan, which we did a fantastic video on not that long ago that I recommend you check out.
So the RDSP, the really neat thing about that one is, you put a few $1,000s in it, $2,500 a year, and the government will match you $3,500 a year. So there's a ton of grants and potentially bonds that exist in that RDSP as well.
It's a great savings vehicle.
Okay, so if you do have the DTC, you get the $8,000 tax credit, but you also qualify for the RDSP. So make sure to talk to your advisor, a guy like me. And for that, you can go to www.speaktorob.com and you can find out all about the wonderful ways to structure an RDSP and how to actually build a portfolio for that. Adam, it's been a slice. It always is a good time when you and I get together and chat about things. I'm Rob Tetrault from robtetrault.com, head of the Tetrault Wealth Advisor Group here at Canaccord Genuity Wealth Management. Thanks for tuning in, guys.